Good afternoon. Welcome to the 3rd of December. Okay, we've got 2 days left this week. We've then got 5 days next week. Then we've got effectively 4 days the following week, and that's the end of it. Okay, so 11 days, guys. 11 days. Make sure you achieve something every single day for the next 11 days. Okay, the guys who make it in this job are the guys that learn something every day. They progress every single day. They don't sit on their phone all day and play around, but they actually learn something. Okay, so what we're going to try and do today, we're going to quickly go over the fundamentals, not much. We're going to move to the ECB, and then we're going to finish with markets in play. So first things first. Anything in the overnights?
Australian GDP.
Good, okay.
0.3 from 0.7 prior.
Okay. So 0.3 versus an expectation of 0.7 for Q3. Was this expected?
No.
Okay, wasn't expected. What's driving the slowdown? What is Australia's predominant?
China.
Okay, so what is Australia's predominant export? Okay, so what have commodities done all year? Okay, so when your predominant export is iron ore and coal, okay, and all of a sudden, you know, there's the price of that is pretty much collapsing all year round, that's what's going to happen to your GDP. Okay, so keep an eye on it. Remember we said that the Reserve Bank of Australia now is back into neutral phase. Right? If the Aussie dollar cannot weaken whilst the fundamentals are showing weakness, then they may actually intervene and cut interest rates so they can get their currency weaker and do pretty much what Japan's done, what the US has done, what Europe is going to eventually do. Good. Anything else in the overnights? Okay, so we had the Chinese PMIs. Did the S&P move on it at all? Yeah. Who didn't check? Be honest, who didn't check what the S&P's reaction to it was at 1 a.m. this morning? Okay, you all checked. Okay, if you didn't check, write it down. I'm not going to have a go at you. Just write down. Whenever there's a Chinese PMI, make sure you look what the S&P does. Okay, 9 times out of 10, it's probably not going to do anything. It's not going to respond. But that 1 time out of 10 where the S&P sells off 6 or 7 handles, and you come in the next morning and you've got a bearish bias or a bearish outlook on your equity market, okay, that just adds that little bit of extra, a little bit of more of a reason to sell that market. Okay, it can be a very good lead indicator for what the European equities will do after the Asia session. Good. Very briefly, there was an article I posted that came up this afternoon. Okay, I hope some of you had the chance to read it. Okay. Confusion over interest rate impact of Eurozone QE. So effectively, what is this article talking about? Okay, they're talking about 2 things. I'm going to minimize it for now. They're effectively saying what's going to happen to interest rates or to yields, okay, when we embark on QE. Okay, so when the ECB finally steps up and says we are going to do some form of quantitative easing, what should, in theory, what should happen to yields? Okay. Okay. Let's keep it basic sense of the word. Okay. So if the ECB is going to step in to buy something, they're going to drive the price up, and yield should, in essence, in theory, go down. Everyone happy with that? Okay. However, what has happened over the course of the year is that everyone has been front-running the ECB eventually doing quantitative easing. So what have we already seen this year? We've seen yields. Okay, so we've seen this move already where everyone is playing for a QE. We've just heard Italy's now below 2%. France is now below 1%. German bonds at 0.7%. So we're already at all-time record low yields. So basically what this article goes about, and I'll get the title up for you so you can go read it, is what happens to these yields once the ECB finally announces QE. Let's have some ideas. What's going to eventually happen? What's going to happen to yields? Good, brilliant. So we got a little bit of profit-taking idea. Z, what's going to happen? The reason I'm showing you this, by the way, guys, because this will be huge. The day they announce quantitative easing, if you do not make money over the course of the 2-3 weeks after that, you have to question what you're a trader for. Okay, because this is effectively where you will make your entire year. But you have to be thinking now already, how am I going to approach this? How am I going to make money in this event? It's going to be volatile as hell. But you're going to have a lot of big institutional players step in and react, respond. Okay, because everyone is positioned one way or the other. So they're going to have to respond when QE finally gets announced. Yes?
That's what I thought, because everyone's positioning into them. When it does the announcement, when you just have to do the opposite quickly,
Good.
flash all the retailers out, because they'll be advised
Okay,
straight away.
good.
Then probably move very sharply.
Good. Okay, so we've got another profit-taking theme idea. Max, do you have any ideas?
No, I just don't see the bonds going down.
Okay, good. We have an idea where bonds aren't going to go down. Yeah?
I would say actually the opposite of what he said, because when they announced QE, the locals were just going to go and buy
Good.
the equities, and then we're going to get the squeeze.
Okay, good. Okay.
Why? Which squeeze?
Okay, he's talking about equities.
It's not because we have a QE that the bonds should go up or down.
Okay.
I expect the next days
Yeah.
to have
Guys, there's no wrong or right here, please. There's no wrong or right. Okay, what I'm going to do is I'm going to get you guys ideas, then I'm going to show you what the article says. Okay?
The market's already their position for the QE.
Okay.
The price is already counting when they're going to do QE.
Okay, good. Good, in theory. Max, do you want to elaborate? Because I think a couple of guys, well, what's making you think that bonds are going to continue on the path up?
Because we see that QE don't provide any inflation in Japan and
Good.
US. So
Brilliant. Okay.
yeah.
Good. Do you all hear what he's saying?
Especially for me,
Good.
if we have a QE, I feel like it's more likely for the interest rate to be higher in 10 years, but
Good.
we don't really.
Okay, brilliant. Do you all hear that? So what he's saying is that, and he's 100% spot on, what he's saying is that even if they do quantitative easing, is that actually going to stoke inflation and growth?
It might do, but it hasn't worked so far.
Okay, good. So what you got a whole two different minds of thinking here. Some people are thinking, well, surely the ECB can't be that wrong and they should be able to stoke inflation, therefore yields should rise. But equally, if the market doesn't believe them and there is genuinely deflation setting into Europe, well then yields will stay compressed. Okay, so that's nail on the head what this article deals with. It deals with these two exact things. It says that in the US, okay, and I'm going to get you the chart up, and that's why I want you guys to go and get this article. Okay, there's the title, Confusion over Interest Rate Impact of Eurozone QE. Okay, let's have a look at this chart. So what this chart shows is, it's showing you effectively what the US happened, or what happened to US yields once Ben Bernanke came out and signaled they were going to do interest rates. So there's the first one. Okay, what do yields do once before they even start doing QE? Yields rallied. Okay, so we went from 2% to 4%. Okay, they started QE1 and yields then came back down a little bit. Okay, again same thing. When they started doing just before they started doing QE2, we effectively had the rally in yields. Okay, and then once they finally started purchasing, it then sold off. Okay, sorry, but what I mean here is effectively, this is the downward path. Once the market believes that they're going to do QE, so once the announcement of QE comes out, effectively the yields rally. Then once the Fed actually physically steps in and starts purchasing, yields come back off. Okay, do you understand that chart? Okay, just because the ECB, if the ECB comes out now and this says they're going to do QE, they won't necessarily start 1 week from now. They may start 5-6 months from now. Okay? And again, for the second QE, and then again for the third QE. So every time they've come out, yeah?
So if we follow that in the bond, for example,
Yeah.
if tomorrow he said okay, QE in 6 months,
Yeah.
we should go down.
In theory, bond prices should go down. Okay? But now this is the second. So that's effectively what we've all agreed. Buy the rumor, sell the fact. That's what the first part of the article leads to. Okay? The second part of the article says, however, if you take the case of Japan, okay, and you look what happened in Japan, Japan did the complete opposite. Initially, when they started quantitative easing, you got this rise in yields, but over the long run, actually you got a collapse in yields, and that's effectively it there. And they based that on two things. They said the one thing was the fact that there was no belief that QE in Japan would actually create inflation and growth, as Max is saying. The second thing they said was a very good reason for it, was that the Bank of Japan owns pretty much 40% of the entire bond market in Japan. So they're such a big player in the bond market that if they're buying it, yields have to go down. Okay? Whereas if the ECB suddenly became a big buyer of sovereign debt, they would only make up roughly 8% of the buyer in the European bonds. Okay, so that was the two reasons they gave for why Japan actually didn't do what the US did. Okay, so it's just a bit of food for thought, guys. You need to start thinking about this because this is going to happen. In the next 6 months, this is going to happen. And you're going to have to respond as a trader. You're going to have your cap on. You can make your career when they announce QE. You can. Every one of you can make your biggest year ever. I want to make my biggest year. I want to make my biggest day ever they announce this. And I want to make my biggest month ever the day they announce this. Okay? But in order to do that, we have to start thinking ahead. We have to start preparing. Okay? Everyone came in here at the beginning of the year. All the senior traders came in, and no one really had a clue about how this year would play out. Okay? The German Bund is now 20 points higher. We as traders need to be on that. We need to be making money on that. And the only way we can do that is by being ahead, thinking how's the market going to respond. Okay, good. Moving on, the ECB. Okay, what's the general expectations? Let's go for it. What are we expecting?
Here's some more talk about the tilt rate.
Okay, good. So we want to, good. Talk to me about that TLTRO. When is it?
12th December.
Good. Cheat.
Easy one, yeah?
Okay. So why is it important to know? Why is it important to know that the TLTRO happens to be after the ECB?
Because they look at that as a basis for future decisions.
Good. Okay. So the current measures we have at the moment is the ABS program. We have the TLTRO, and we have the covered bond purchases. Okay, so that's the three programs. And effectively, the market wants them to make up how much? 1 trillion euros from that. Okay. So now we heard this week, we heard someone come out and say they were talking about what's the total being bought in the ABS at the moment. I think it was something like 500 million. Okay, and they were talking about the covered bond purchases for this week was something like 9 billion. Okay. Are we getting closer to 1 trillion? Okay, so we're a long way off still. Now, the TLTRO1, how much was the take-up in that?
90 billion.
Okay, call it 90 billion. I think it was just shy. Against what was expected?
120.
150. Okay. What's the expectation for TLTRO2?
150.
Okay, 150 billion. So what's the total there? Let's say they take up the full December allotment. That's 240. Okay, are we getting closer to that 1 trillion?
No.
Okay, so do you understand now why the market is almost expecting Draghi to announce that next measure? Mr. Draghi, you want to get to 1 trillion. You told us you want to get to 1 trillion over time. How are you going to get there? You're not going to get there via the ABS market. It's too small. You're not going to get there via the covered bond purchases. It's too small. Okay, so Draghi eventually will announce some form of other measure, some form of the central bank buying something. Okay, it may come in the form of sovereign debt. It may come in the form of buying gold. It may come in the form of buying agency-backed bonds. Okay, there's a number of ways he can do it. He may even come in the form of buying corporate debt. Okay, we've heard those four things thrown out there. The question is, when? When is Draghi going to finally actually step up to the plate and announce these new measures? Okay, a lot of people, and this is what I want you to come in with tomorrow, a lot of people are coming in tomorrow saying, oh, it's unlikely he's going to do QE. Bullshit. Okay, I'll tell you one little secret. When I started a Futex in September 2011, okay, Draghi at his very first meeting came up. He had been there for 2 weeks, and he stepped up and he cut interest rates. Okay, against all market expectations, no one had a clue what was going on. He had been there 2 weeks and he cut interest rates. Right? He surprised us twice over the last 2 years. Draghi's the kind of guy that likes to surprise the markets. Okay? So don't think just because we haven't had the second take-up, don't think just because the market is sort of leaning on Q1, Q2 for quantitative easing or more measures, don't think he cannot step up tomorrow and say, you know what, actually, we're very shy of that 1 trillion. Let's do something now. Let's prep the market now. We may as well. Okay, don't be surprised if he gives the market a little bit of a Christmas present tomorrow. Yeah.
What is the probability of them doing the purchasing of the gold? Because after the S&P referendum,
Yeah.
there was a lot of, before prior to that, there was a lot of talk
Yeah.
saying that that's a nice idea.
Yeah.
You know,
Again, whatever he buys, he needs to buy something. He needs to put money into the system. He needs to drive down longer term yields. That's what he needs to do. How he goes about that is what the ECB will be sitting talking about now. Okay. So what I want you first thing to think of, guys, get away from this piece of paper, this ITC that says the expectations. Yeah, right at the beginning it says no cut, no nothing. Get away from that. Okay. Ignore the expectations. Fresh mind. Draghi can either do something tomorrow or he can do nothing. How is the market priced? In other words, what are the expectations? And then how are you going to trade that plan? Too many traders come in forming their own view, and then what happens is something comes that they're not expected, and they freeze like a rabbit in the headlights, or they only use small size because they don't believe in it. Okay, be open-minded to anything tomorrow. Okay, so let's briefly go through this. What are the expectations? Okay, so no real surprise to rate cuts and no real change to quantitative easing. Okay, yes, there's a bit of talk that he'll talk about the TLTRO. What can he do to make this TLTRO a little bit better? How does the TLTRO work? What is a TLTRO?
Where the bank can borrow money from the ECB.
Yeah, good. You can speak louder, by the way. Okay, the camera's not on you, so don't worry. Okay, so effectively the bank can borrow money from the ECB. What does it borrow money at? What rate? MRO plus 10 basis points. So what can Draghi make what can he do to sweeten this deal up a bit?
I'll cut the basis 10.
Okay, so effectively remove the 10 basis point. Would that be a form of making it more attractive? No, you'll hear that in the statement if he wants to make it. Okay. What will the impact be on that in the market?
I don't think it will much. It's still
Why won't it be much?
because bank can't borrow to lend to others. No one's going to take the money.
Okay. Good. Or more importantly, is 150 going to make a damage to the 1 trillion effectively? That's what you got to ask yourself, guys. When you go into tomorrow, if you want to know how big something can be, you've got to ask yourself, how much closer is it going to get us to that 1 trillion target? Okay, if he comes out and does a corporate debt type buying, how much closer is that going to get us to the 1 trillion target? Simple answer is not a great deal closer. Yes, there may be 200 billion worth to buy and the ECB may buy 100 billion, but are we getting closer to that balance sheet target? Okay, so yes, of course the equities will rally, but are they going to rally 5-6% or are they going to rally 1%? That's the kind of thing you need to think about. Everything is based around how are we going to get to that 1 trillion mark. Okay, so the expectations are for no real QE. The expectations are for him to maintain this dovish stance. Keep talking about how they're going to get inflation to tick up. Okay, that's what they expect. They expect a very dovish Draghi. Okay, so in order of what Draghi can do, what can he do? What can he do that will be a surprise to the market? So let's go for surprises. Just that's bad spelling. Okay. Let's do it in order of probability. So lowest probability. Okay. So the least likely. What else can he do?
Change the language. So it's
Okay.
maybe like, didn't he mention something about approaching critical levels of inflation expectations or something? So if he
Good.
sort of kept up with that, and that
Good.
became
Okay, so effectively, if you change the language in terms of inflation expectations. Okay. Remember, 2015 is expected to be downgraded in terms of forecast. 2016 is expected to be downgraded in terms of forecast. 2017 is what? As expected. Okay. What part of where does the ECB effectively look? Do they care about 2015?
No.
Why not?
Secure, but
The medium term. Good. Okay. They care about the medium term. So guys, 2017, when they come out with the forecasts, if that comes to the downside, okay, you're going to get some good movement in the market. Okay, because then they're starting to downgrade their medium-term forecast of inflation. But more importantly, do you think they will downgrade that 2017 forecast without doing some countermeasure? Okay, so effectively, will the ECB come out and say, actually, we're struggling with inflation, it's really bad now, without doing something? Okay. If the ECB is really concerned about the medium-term outlook, they will act before they become concerned. So they will do quantitative easing before it reflects in the 2017 forecast. Okay. With that in mind, what did inflation do last Friday?
In line.
0.1%.
Good. So we went from 0.4 to 0.3 on the headline number year on year. What did the core do? Okay. 0.7 to 0.7. Which part of that does the ECB look at?
Cool.
Okay, why? Why do they look at the core number and not the headline?
rate more
Why?
because it's shorter term.
It's got the food or energy or something else in it that makes
Okay.
it different.
Good. Your core's got the excludes volatile stuff. So your housing, mortgages, your oil, okay, those kind of things that are very volatile. That's why the ECB looks at the core number, not the headline number. Okay, the headline number currently they're saying is coming down because of the oil price, the effect on energy prices, energies and commodities. Okay, so effectively the core has stayed at 0.7. Important to know this. Why? Because Draghi can just step back and say, well, hang on a sec, what's changed from November to December? Inflation is still as expected. We said it was going to bottom out. We said it would be low for a long period of time. Okay, good. What other surprises can they do?
Cut rate again.
Sorry?
Cut the rate.
Okay, good. Yes. Okay, please, I hope you're writing this down as we go along. So they can cut interest rates. What interest rate would they cut?
Deposit rate.
Okay. Can they cut the refi rate? It's a simple question. Can they cut it? Yes, no? Come on, guys. Can they cut the refi rate? Who says yes? Who says no? So most of you don't have an opinion is what you're trying to say. Okay, let's go through basic economics. What is the refinancing rate? In fact, what is the current refinancing rate in Europe? 0.15 effectively. It's on the lower bound. It's as low as it can pretty much go. Okay? Hey?
0.0.
It could well be. It's very close to zero. It fluctuates. It's a bit like the US. Okay? So we're on pretty much zero. Okay? So can they cut interest rates further?
Yes.
In theory, yes, they could. But why can't they?
Market does not believe.
Hey?
Market will not believe on that.
Market will not believe.
Just the structure of refinancing, it makes no sense.
Okay, good. Why does it not make sense? You're on the right track.
How it works, but it's like it's something that they're giving back, right?
Okay.
So just basically they cannot pay the spread. From
You're on the right track. Okay, effectively, in a nutshell, I don't want to bore you with this, right? If the ECB were to cut rates even lower, where are banks going to start lending from? Would I come to you and lend from you at 25 basis points if I can go straight to the ECB and get it at call it 15 basis points? Okay, why will I go to the ECB? Because
it's cheaper.
it's cheaper. Okay, so you don't want to cut interest rates to the point that it disincentivises banks to lend to each other. In essence, that's how it will work. Okay, but what they can do is, what rate can they cut? If they wanted to cut rates, what can they do? What rate can they cut? They were very unlikely, but deposit rates. Okay, so we're at negative 0.2. We can go further negative. Okay, is that beneficial though? Okay, very unlikely. Now I'm going to throw a little conundrum out. I'm going to call an increase in interest rates. Okay, and this is something that not many of you would have thought about.
Increase interest rates.
Okay, why would the ECB potentially increase interest rates? And it's something that's kind of explained in that document, but you need to think a little bit.
You're talking just about the deposits or overall?
Yeah, deposit rates. Okay, so why would the ECB increase interest rates?
To increase the liquidity in the system without...
Okay, no, increasing interest rates won't increase liquidity.
Sorry.
It won't increase liquidity. You're on the right track. It's got to do with the sovereign bonds.
Because more convenient is to deposit in the CD.
Okay.
More money there are in the system.
Okay.
Because the banks say I
Good.
can put my money in
Good.
the deposit, but I put my money in somewhere.
Okay, good. Effectively, guys, very briefly, what is quantitative easing? ECB comes and says, here we go. We're going to buy. We're going to buy bonds. Okay. So, what happens when they buy those bonds? What happens to the money in the system?
They put liquidity, so the euro should go down.
Okay, good. So money goes into the system. Okay, now what are banks going to do with that money? Okay, so effectively, in theory, banks should come out, take that money, take up all that money, and do something with it. Invest it somewhere. Buy more bonds. Buy more Italy and buy more Spain, because yields should continue to go down. Okay. Now, if the ECB wants to create an environment where it's good for banks to park money or leave money at the ECB. They need to get deposit rates to back towards zero. Okay, it's not spoken about much there, but if you go read up about it, effectively when the US and Japan did their quantitative easing, okay, all their deposit rates were at zero. There was an incentive for banks to take up all the extra money. Okay, you don't want to create a disincentive, say to the banks, you can take up all this money because we're going to do QE, but then if you park it at us, we're going to charge you 0.2. Okay, do you understand that? So it's almost a case of if at 12 o'clock tomorrow they hiked negative deposit or they hiked deposit rates, okay, you're going to get a very confused market. But in essence, if they did that, it's pretty much potentially the ECB leaning towards some form of a QE play. Okay, it's not spoken about much there, but that's one of the surprise type things that could happen tomorrow.
What would you do if something...
Okay, first things first, what would happen if they rose interest rates? Max?
Equity should go down.
Okay, so equities in theory should initially go down, bonds should go down, euro should go up. Okay, initially. But if it then becomes a QE play, what will equities do? Okay, equities will turn around and rally. Bond markets will. Okay, some people say rally.
Yeah, we don't really know.
Some people say dump. What will the euro do? Okay, the euro will probably go up initially and then go down. Okay, so we all agree equities down and then up.
Yeah.
Okay, so you all understand how something like that will play out tomorrow potentially if they do something like a yes.
I think that it's very probable, unlikely.
Of course.
Because the Euribor can't be so tight,
Yeah.
the corridor for the Euribor.
100% agree with you.
So they could lose credibility.
100% agree with you. At no point am I saying that's a high probability. What I am trying to say to you is it's a probability. Okay, it could be a lead on that they can do some form of QE. Okay, I'm happy with that.
Yeah. If they cut, you buy bond, buy equity, sell euro.
Sorry, if they cut interest rates.
Yeah.
Okay, yeah, you want to buy the bonds, buy the equities, sell the euro. Okay, so very briefly, let's go over pricing. How's the market pricing into this? What can we use to give us a clue for pricing? Okay, these guys go and they talk about pricing in the Ionia and they talk about pricing in the Euribor. Is the Euribor going to give us any indication as to pricing? Okay, someone says of course. I'm going to disagree with you. Does anyone think it will give you an indication?
No,
Okay, why not?
because traders cannot position in Euribor.
Sorry?
The traders just position like in other things like Euro.
No, I don't agree with you.
It's perfectly priced now, isn't it?
Okay. Effectively, guys, rates are where? Okay. Can rates affect? Can people be pricing for further measures in the front end of the curve?
No.
Okay. It's not necessarily no, but there's so little juice in there, and there's so much liquidity in the system that it's very difficult to actually determine what is being priced. Okay, and that's why you'll hear when Imran comes here tomorrow, he'll tell you about a little bit about the pricing and what it's done since the last ECB. But he'll also tell you that it's very difficult to determine from the Euribor strip actually what's being priced. So where's it better to look? Where else do we want to look? There's easier places to look how the market's prepping for tomorrow. Well, let's start with, let's go 1 second back. Let's go to inflation last Friday. What did the markets do on the inflation print? As expected.
Nothing.
Okay, I wouldn't say nothing. There was a little bit of a move. Okay, what was the little move that came out? What did the euro do? Okay, what was the euro's response to it? The euro stocks?
Went down.
Oh, that's the stocks. Okay, so the stocks initially went down about 12 prices. What did the euro do on it? Okay, come guys, what did the euro do on it? Okay, rallied about 20 pips on it. And what did the bunds do?
Nothing.
Okay, initially the bund kind of spiked up and then it started to sell off a little bit. Okay, there was about an 8-9 tick sell off.
It was
2-3 minutes
during
after.
the bank holiday, so
Okay.
it was so slow.
100% agree, Max. 100% agree. Okay, so that's our first little clue, what inflation did. Where else can we look?
Sovereign bonds.
Good, you're 100% on the right track.
But BTP is running those days.
Okay, good. So let's go to the overall picture. In other words, what have the markets done since when? Since Draghi came out very dovish 2 weeks ago. Okay, Draghi came out and said that he needs to do something fast to get inflation expectations to tick up. So what have the markets done since then?
Continue the upward move. Well, the stocks continue the upward move.
Okay, good. So let's start with BTPs because obviously you're talking about the periphery. How far have we gone since then?
I don't know, but it's up every day, and even when
Okay.
even when the OAT and the bund are going
Good.
down.
Good. Okay, so we're roughly 355 ticks higher. Okay, in terms of yield, we're about 22 basis points lower.
French yields sub 1% first time. Right?
Okay, good. So we all agree bond yields are lower. Okay. What are the Euro stocks done since then? Okay, so we had that big excessive day, and then we've just done lots of little dojis. Okay, so the Euro stocks is very bullish since Draghi. Okay, and what has the Euro dollar done? Okay, so the euro dollar was trading around 124.60 before. We're now trading just at 123. Okay, so another 150 ticks lower. And what has the bund done since then?
Little bit higher.
Okay, so how would we compare that? If you look at the bund 10-year and compare it to a gilt 10-year and a US 10-year, the US 10-year, you'll see the bund took out the October highs that we made when we had those panic moves. The gilts have pretty much got close to it, but not even taken it out, and the T-note's very, very far away from it. Okay, so the bunds have outperformed the other 10 years. Okay, that's the easiest way, guys, to go and determine the pricing. Because now you know for a fact the market is going long the bonds, is going short the euro, is very long the BTPs, and it's very long the euro stocks going into the ECB. Okay, the market is pricing for a dovish Draghi. Now the art is for you as a trader, you need to determine what can Draghi say that can make that market either more dovish or less dovish, and then react off that. Okay, it's a simple case. Draghi needs to come out tomorrow and be even more dovish. He needs to tell us why he told us he wants inflation to tick up in the near term. Otherwise, you're going to get the BTPs going down, you're going to get the euro going up, you're going to get the stocks coming off, and you're going to get the bonds coming off. Okay, do you all understand? You don't necessarily need to look at the Euribors to determine pricing. Okay, the last thing. Where's the last point we can look at pricing for? There's one more place.
Can I just ask, sorry, Brannigan, on
Yep.
that? So if he disappoints tomorrow,
Yep.
are they going to get smashed?
Okay.
What's the story?
Let's quickly finish the pricing, and then we'll go through the structures of the market so we can get an idea where the opportunities are. Okay, where's the last place we can see the pricing? And I'll give you a clue. It happened today. Okay, if you ever want to know how a market is pricing going into something, just look what it does the day before the big event. Okay, because that's when you're going to get that last little bit of pricing going through. So, let's look at today. What did the euro do today? Down a little bit, down about 100 ticks, mate. Okay, not only is the euro down against the dollar, the euro is down against the pound, it's down against the yen, it's down against the Australian dollar, the New Zealand dollar, the Swiss franc. Okay, so we've got a weaker euro going into ECB. Okay, what has the bund done today?
Low, high, low, high, low, high.
Okay, good. So effectively, we had the sell-off on Monday. Tuesday we had the inside day. Today, the market failed to take out and continue lower. Okay, so effectively, whilst the T-note has now taken out that low and continued low, whilst the gilts have continued low, what has the bund done? It's being held up at the moment. Okay, it's being held going into the ECB. What have the BTPs done? Max, you said it earlier, the BTPs have?
Yeah, it's going up every day.
Good, so we've got another very big aggressive green candle in the BTPs. What has the Euro stocks done? Okay, good. So the Euro stocks, we've had the big up day, and we're now stuck inside this flag where we're forming all these wonderful, gorgeous little dojis. Okay, so effectively the Euro stocks didn't give us too much of an idea today. Okay, do you all understand? You want to determine pricing. 1, have a look how it performs the day before. 2, have a look how it performs maybe from meeting to meeting, how the markets have performed. Or maybe have a look how it performs from when the central bank has last spoken. Okay.
Brilliant.
Yes.
The euro stocks actually didn't want to break the high. It was like it was leaving it for the next day.
Yep.
Something.
Okay. Good. It's important you say that. Okay, because the next step now is we talk about what? We talk about structure. Okay, and Rob, you just asked me what's and when's and how's. Okay, it's very simple. Write this down. Okay, I'm giving you my trade plan for tomorrow. Bunds, what's the long-term trend? Good. What's the short-term trend? Okay, right. I wouldn't say that. Okay, so we've got the long-term up, we've got the medium-term still up, and we've got the short-term a little bit down. Okay, so effectively, what have we done in the Bund the last couple of weeks? Well, we made that all-time high, that scary high up at 80s. We then pulled back nice and aggressively. We then took out that high this week very early. We've come back below it, and yesterday we tested it, and that's now the high of yesterday. And that's effectively where we are. Okay, firmly below that previous all-time high. So you can understand. Hey?
It's 40. It's 49 now.
Is it 49? It's 50. Sorry, Max, you're right. Yeah.
Oh, I think it's
Okay. So the structure: long-term up, medium-term up, short-term up. Okay. Now let's go in a little bit. Let's scroll to see what we've done over the last 2 days. Okay. We know that the US bond market is trending down or slowly drifting down. We know the gilts are trending down. Okay. If Draghi comes out tomorrow and he disappoints, i.e. he doesn't give the market the dovishness it's wanting, what do you think this bund's going to do?
should reach his friends.
Okay. So effectively it should play a little bit of catch up to the UK and the US bond market. So where's our key point? Well, it's simple, guys. You take our 10s today and the bonds should continue down. Okay, that'll be your clue. That'll be your indication as to whether Draghi is disappointed or not. If it starts to get heavier around today's lows, around those 10s, okay, then you've got downside in the bunds effectively. And don't forget the levels to downside. Lee spoke about the 80s, the ledge. Okay, it's a quadruple bottom ledge. If Draghi really disappoints, just think, you've got 30 ticks all the way to that ledge, and then you've got a few more below that ledge. Okay, so that's how you need to be thinking. How much downside opportunity do I have? Okay, equally, we've got the 50s. Previous all-time high, and just above it you got the Marabous, the 54s. So if Draghi comes out tomorrow, and he is really, really dovish, and he gives the market what it wants, how does the market respond on that double top now? Okay, if it takes it out nice and aggressively and closes well above it, okay, then he's given the market what he wants. But if the market cannot sustain that break and comes back inside, okay, just keep an eye. Do you all understand how to work out your structure of your market? If you want my opinion on the market to trade, trade the Bund tomorrow. It's probably got the nicest structure of all the markets to trade. Actually, the Eurostoxx and the Bund. Okay, you all happy with that?
Yeah.
Good.
Sorry, Brannigan,
Yes.
would you expect such a continued move though? Because you don't know if buyers could step in.
Would
anyway,
I expect such if?
Because like
Yep.
he's just going to put it off, isn't he? You
Okay.
know, that's what he's.
Okay,
he's
100%.
notorious for that,
Good,
so
good. So what's
he's
Rob?
talking a good game.
Brilliant. What's Rob saying, guys? Very important. Listen here quickly. Okay. If Draghi were to come out, okay, and say all the wonderful things, yes, initially you may get a down move, but then participants may just say, well, if not now in December, then in January. Okay. So if he doesn't do QE now, then he's probably going to do it in January. So that's why you need to be very switched on to the price action. Okay. Don't get stuck in a view. Trade what you see in front of you. Okay. And that's why it's important to understand structure. Good. Well done, Rob. Okay. So next market, Eurostoxx. Okay, you told us, Yannis, that the Eurostoxx now feels like it's just waiting. Okay, and I want to get this chart up so I can just show you something. Okay, what's the trend of this? What's the long-term trend of this Eurostoxx? Okay, so long term's up. What's the medium term? Okay, up. What's the short term? Okay, but again, by short term, okay, yes, you could say effectively that is sideways, or you could effectively use that. That's maybe your medium term, and your long term's the year. But effectively, all three indicators are leaning up in the Eurostoxx at the moment. What does that look like to you? And I know I've drawn it already. That's all it is, guys. We're in a bullish flag. More importantly, what has the Eurostoxx done the last 1, 2, 3, 4, 5, 6, 7 days in a row? Okay, so if I was to draw this on a weekly profile, it's going to look a little bit something like that. Okay, so we know this market needs to now either continue the trend, otherwise give up the trend and come in and start filling in a bit of value. Okay, so it's as simple as if Draghi can come out tomorrow and convince the markets that everything's going to be okay, they're going to buy endless amounts, okay, that Eurostoxx should do a trend continuation move. If it cannot continue the trend, what is that telling you about Draghi? How the market's responding to Draghi?
Don't believe it.
Okay, they don't believe him, or they're disappointed. They don't think what he's saying is enough yet. Okay, so you may get that Disappointed down move in the equities, but how does it respond on that lower bound? Okay, are people going to play the whole, well, if he's not going to do it in December, he's probably going to do it next year, so we'll just keep buying the shit out of European equities? Okay. Do you all understand how just leaning on the structure is going to tell you? You don't need to interpret Draghi. Let the market interpret Draghi. Okay. Yes, if he says something blatant like we're doing QE, by all means, go for gold. Okay. But if he comes out a little bit blasé, a little bit question marky, the same as, you don't need to guess. Just let the market tell you which way it's going. Cool. Everyone happy with Euro stocks? Brilliant. Okay. The last market is the Euro. Let me just get a Euro chart up there quickly. Okay. What's the long-term trend of the Euro? Okay. So we've got the long-term trend from 140 all the way down. So we are down on the long-term trend. Okay. What's the medium-term trend? What's the short-term trend? Okay. So effectively, what do we see here in the Euro over the last couple of days? Okay, again, another classic little flag, making little higher lows, and eventually it's finally snapped lower today. Okay, so again, the euro dollar is giving very obvious structure. The reason I show you the structure, by the way, guys, is because you might not always see the structure in your own market. Okay, but if you're trading, say, the euro stocks, make sure you've got a euro dollar ladder up. Okay, because if suddenly you see that euro dollar blip lower and then reverse and come back inside that flag, it's telling you a lot about the market's perception. Okay, and sometimes if you're in the euro stocks, you can actually lean on the euro to get an early entry. Okay, a lot of traders will always lean on the most volatile markets to get an idea of how the market's responding to a statement. Okay, so very simply, guys, this trend should continue. What's volume doing? Increasing. So we're breaking a flag to the downside. Okay, volume's picking up. So for all intents and purposes, that euro should go lower tomorrow. But it's going to need Draghi to convince the market that what he's going to do is going to be enough. Okay, do you all understand that? Does it make sense to everyone? So important, guys. Make sure you understand your structure. You've got 3 very good markets to trade tomorrow. They can go up, they can go down. They've got opportunity on both sides. Okay, so there's no excuses for any of you to not make money tomorrow. Every one of our major 3 markets are lining up for good opportunities. Okay, if you want, heck, go trade the BTPs. I'll show you a chart. It's just a straight line. Okay, if he doesn't give the market what he wants in terms of the BTPs, you're very easily going to see a 40, 50, 60 tick pullback. Okay.
Brannigan, he gives the market everything it wants.
Yeah. If it gives the market what he wants. Good.
He goes all in.
Okay. If he goes all in and announces quantitative easing tomorrow.
Go all in, really, don't you?
Okay. Well, let's talk about that.
Hold the balls.
Let's talk about it. Okay, if he goes all in tomorrow and announces full-blown sovereign quantitative easing, who's going to trade equities? Okay, what sort of an upside target do you think the equities will have?
Last time highs.
Good. Give me a tick value.
Oh, you don't need a target, you can just buy them.
Yeah.
Okay, hold on. I like that confidence, Mac. Give me a tick value.
About 40.
Okay, we got 40 ticks. Brave, I like it. Anyone else?
What if he says full on we're actually doing it?
Yep.
Connect to, say 120 ticks over the day in stock.
Cool. Anyone else? Rob?
It's obviously going to go up, pull back, do its thing, profit take, but yeah, you could. What's he going to put in? 800 billion? Is that to hit the trillion mark, is it?
Come on, convince me, Rob. You're not convincing me.
Well,
If
know,
you were my
50,
broker right now, I'd
60,
say,
yeah,
nah, I'm not keen on you.
Rally right into the end of the year.
Okay, now you're starting to think, guys. Okay, so yes, we all agree that initially there's going to be a very, very volatile move. It'll probably move 50 ticks, maybe pull back, maybe rally another 60 ticks, do all sorts of crazy things. But over the long run, what are the equity markets going to do if Draghi comes out and announces QE tomorrow? Okay, are they going to go up 1%?
No.
2%? 5%?
Most likely will catch up with the S&P, the US.
Okay, now you're thinking, John, what has the S&P done since 2009 when we first did QE? Okay, we've rallied 150%. We've gone from 600 to 2060, 2070. Okay, so again, use your head, guys. And I know none of us are long-term traders, okay, but just remember this, because if you come in and you maybe buy your full-size 10 lot, okay, get your 40, 50 ticks and then hold on to something. Be brave and hold on for a 2 lot or a 3 lot and see what you can take out of it. Learn the experience of what happens when something big comes out. Okay. As for the bond markets, what do the bonds do? Okay. Bonds are a tricky one. Yes, bonds should initially go up. Okay, they are buying bonds. But then it all comes down to how does the market perceive QE? Does it perceive it as inflationary and creating growth, in which case bonds will go down? Or do they rally based on the fact that the ECB is going to step in and buy until whatever happens? Okay.
If the ladder is really thinner, I think it's better to not touch it.
Okay. The ladder will be thin.
You could be 50 ticks offside instead.
Okay. The ladder will be thin. If he announces QE, you can bet your bottom dollar that you will probably have a few white boxes across a few markets. Okay.
Yeah, the bund wouldn't punch it.
Okay. Good. More importantly, guys, remember, if he announces QE tomorrow, do you think a hedge fund's going to go, oh, all in?
No.
Why not?
So at the end of the year, they don't want to mess up the.
Okay. So first thing, it's year end. If I'm a hedge fund, I'll say to my guys, you've only got 20, 30 grand to play with tomorrow. You lose more than that, game over. Okay? So the market's going to respond in stupid ways. It's going to do stupid things where you go, but it has to go down. It doesn't. Okay? It only has to go down if someone sells it. Okay? So you may find tomorrow may be the worst day of your life, where the market will rally 5 points in a straight line and everyone does their ass. And then the next day it collapses 5 points in a straight line when people have had time to think. Okay? This happened. There was a 280 tick move up and a 280 tick move down. It was on an ECB meeting. On the Bund. Okay? Effectively, Draghi came out and he spoke about all sorts of conditionals and wonderful things. The Bunds initially sold off. They then turned, rallied, and then they blipped 60 ticks. I've told you about that trade before. Okay? That candle finished a very big green candle, 280 ticks up. The very next day, we did 280 ticks down in a straight line. Okay? Crazy things can happen, guys. The important thing for you as traders is to just be aware that tomorrow's another day, and the next day is another day, and there'll be another trade. But there'll only be another trade if you can figure your way around. I promise you, they announce QE tomorrow, you will get plenty of opportunities in the next couple of weeks. Fuck, I'll cancel my holiday to South Africa to stay here. Okay, there will be so much money on offer. Don't panic tomorrow. Yes.
Go in all in? If he's going to go in, is he going to go all in?
Okay.
Or is he going to bullshit it and just say...
Who knows, Rob? Who knows? The important thing is...
Last time he said he was just going to put the balance sheet back to 2012.
Yep.
But what other outliers is there? Because I'm like, I'm either going to be all in, I'm
Okay.
not at all.
Well, if he announces some form of quantitative easing, he'll announce it as an all-in. He'll announce that the ECB is going to start a bond buying program of up to 1 trillion in tranches of 50 billion a month for the next 3 years. He'll announce it. It'll be very obvious. It'll be very specific. Okay, make sure you note what he buys. That'll be important. If he decides to buy a range of things, okay, just know that. Okay, good. The last one was the euro dollar. Okay, so very briefly, what has the euro dollar done over the course? And this is a very important chart I want to show you. Okay, what will every retail investor do tomorrow if he announces QE? Okay, so what do you think every smart money has been doing since June of this year? Okay, so we've got a 1 down wave. We've got a 2 pullback. We've got a 3 down wave. We've got a 4 pullback. And now we've got the 5 structure. Okay, smart money was selling, okay. If you were reading the newspapers back in the day, you would have heard about all the hedge funds being stopped out of short euros all year long and how they've had such a tough year. Okay, those guys got back in. You 100% guaranteed they got back in this trade. Okay, so the market is preparing. They're waiting for Draghi to say QE. So what's likely to happen? Well, first things first is you're probably going to get a very aggressive blip down. 100, 150, maybe 200 ticks down. But at some point, these guys are going to say, cha-ching, time to cash in on stupid retail investors getting short. Okay, and that's when you can get a 100 tick down move and a 300 tick reversal trade when everyone decides to take profits. What will it look like in short-term time frame? Well, it'll blip down. You'll get your first pullback. You'll get your second little bit of selling. The minute it gets back above that point, okay, if you're trading the euro, put your hands in your pockets, be a man, and fucking buy the shit out of it. Okay, because every other hedge fund will do it. Okay. Any questions? By the way, these are just opinions, disclaimer form. Trade at your own risk. Yeah.
How would you have an indication based on volume on a potential reversal?
Okay. In terms of volume, you're not going to get a very good... Okay, very quickly, guys. How a reversal trade works, okay, on a fundamental. It'll blip down, quickly. Okay, it'll blip down, you'll get that pullback. Okay, your volume on that will be extremely high. It'll be the highest volume on the blip down. Okay, on the pullback, the volume will go a little bit lower because there's a bit of profit taken from the algorithms. You'll then get a re-entry from retail investors, from fast money, effectively. The minute it takes out that starting point, you'll start to see the volume will pick up slightly. Okay, but you'll still get people selling it simply because they're stuck in the fundamental. They're stuck in the view that it has to go down. Okay, where the volume will pick up is when it triggers maybe the second pullback point. Okay, when it takes out that second pullback point, that's when you'll get the very big volume, because then everyone is caught short, they're covering, and everyone looking to long will buy at market. Okay. More importantly, the juice of the move will come in the middle section when the volume picks up. That's when you'll get your quickest amount of money. Okay, that's how a reversal trade works, guys. Please, I've probably got a nice recording of a reversal trade. I will show you at some point. Okay, but learn these trades. They're absolutely gorgeous free money. It's wonderful seeing people getting caught. So good. Okay, but you have to know how to trade it, and you have to know how to take advantage of people's emotions.
And you have to not take 2 ticks.
And you have to take 200 ticks, not 2 ticks, as Max says. Okay, good. Very briefly, what's out tomorrow morning?
Bank of England.
Okay, so we've got Bank of England. Are they a market mover at the moment? Okay, are they likely to hike rates tomorrow?
Nope.
Okay, are they likely to reduce their QE bond purchases?
Nope.
Okay, so Bank of England's probably going to be a non-event. Is there anything else out before ECB tomorrow? Okay, so in terms of MM, what is MM? In terms of money management, what do we not want to do tomorrow? Okay, if your stop is 400 on the day, my goodness, you do not want to be using more than 150 of that 400. Okay, you want to be risking maybe 30% of your day for the morning session. Okay, keep your chips for the afternoon. That's when the fun and games will come. Okay, very briefly, I've written down their markets in play. From now on, what we're going to start doing in the debriefs. Okay, I'm going to point you in the directions of markets that are in play, markets that are giving trade opportunities. Okay, very briefly, what markets are in play at the moment? Okay. Gold is definitely in play. Why? Because we did a $70 up move on Monday. Okay, and we're consolidating. If you look at gold, that's what we've done the last 2 days now. So effectively, this market is in play. It's a market that needs to make a decision. It's either going to rally or it's going to reverse. One or the other. There's money to be made in this market. Okay, what are the markets in play?
Oil.
Okay, good. Oil's in play simply because we've had this big collapse over the last couple of days. So we've had the big down move. We had the little bit of a profit take move, and today we've kind of struggled. Okay, so we're struggling to bounce now, so keep an eye. If that market starts to go off it again, it's going to get quick. It's going to go down fast. The entire market's looking to short. No one should be looking for longs yet. Okay, good. What other markets are in play?
DAX yesterday.
Okay, DAX, no, I disagree. Okay. Yes, dollar yen, brilliant. Okay, dollar yen's in a very aggressive down move. Again, we had 2 consolidatory days, but now we've taken out that lower bound again. Okay, so the yen continues the downtrend whilst the moving average tries to catch up. Okay, yes, so keep going. By the way, what do I mean by a market in play?
Volatility.
Okay, yeah, you're on the right track. So volatility,
Bigger than average moves.
so range extension, volume, okay.
The trend?
Good, a market that's trending, guys. A market that's giving you an opportunity to make money. Okay, so let's briefly look at the Eurostoxx, and I'm glad Lee mentioned this today. Is this a market that's giving you an opportunity to make money?
Yeah, if you fade everything.
Okay, good. Yes, 100% agree. Of course, if you fade everything, okay, but that's a very difficult way of trading. But the important thing to understand is, guys, this market will come back into play. Wait for it. ECB tomorrow is what will probably put it back in play. Okay, know when a market's in play, because if you know the market that's in play, you trade the market that's moving. It's going to give you opportunities, whether you're a fader, whether you're a breakout trader, it doesn't matter what you are. Okay, trade the markets that are exhibiting opportunities. Stay away from the markets that are not giving too much opportunity. Okay, last thing, Bund is rolling. It'll roll into the front month tomorrow morning. Okay, you should be trading the March contract by ECB. Okay, are there any questions? Does anyone want to add anything? Good, have a good evening.